Hello, everyone. This is Stephen Richardson. Today, we're going to be talking about the preferred procedure in your stock selection guide, plus or core, either one. When you click on the earnings to project the future earnings, a screen pops up that says preferred procedure. And we're going to look at how that's calculated and how you can go into actual data. You can go into value line projections, you can go into the annual report and change that amount based on the data that you're seeing. Again, this is a projection that's done by the computer. It's done like that. Okay. Disclaimer: this is education purposes only. It's not financial advice. I'm just teaching you today. That's all I ever do is teach you. Okay. Calculating with future earnings per share based on future sales. So when you pop up that window, this is what it does. This is basically a rudimentary income statement. It takes your sales growth rate of 19. Well, I said 19.3% for this stock, Viva Systems, and it calculated out the revenue, right, less the pre-tax profit that's shown, the average pre-tax profit that's shown on the first sheet, less the taxes. So it's calculating taxes here. This Viva Systems is in India, and then that's why it's so low. And then takes out any shares, any dividend from the shares, and comes up with this 14.1% for this when this was done back in, I think it was 2018 or 19. So that's how it's default calculated, right? So we're going to show how this can be manipulated based on real data. Calculating future earnings based on the revenue projection creates an expected income statement 5 years into the future. It connects future sales to future earnings, and it's a second opinion for your initial EPS. Remember where you go to all your sources: the 10-year, the 5 year, past percentage change, recent quarter, trailing 12 months, what Yahoo Finance says, what Zach says, what the preferred procedure says, what ValueLine says. This gives you a second opinion so you can recalculate your preferred procedure and get a better understanding. Okay, so I snipped here the evaluate management 22.3%. Last year it was 27.7. So uh, that's how it came up with the 22.3. The defaults and then the judgments, you can see it's how it calculated 14.6%, right? Okay, so now you go into the annual return and you find out what the effective tax rate was, and it was 10.5% in 2018. Now, Value Line shows the tax bracket that they're in. This is Value Line in 2019. So I'm changing their tax from 3.7 to 10.5%. Okay, that's based on the annual return, the effective. And that brings it down to 14.6%. Okay, so shares outstanding, we can further manipulate this. Um, it judged that there would be 143 million shares outstanding. We go to Value Line. Well, we go to the annual report and see what it was in the annual report. And then we can go to Value Line and show what it's projecting 2 years out. So it's projecting 155. It doesn't give a 5 year projection for this, but 2 years. So we can change this to 155. We could do that, and we change it right there for our judgment. Okay, so you can adjust the defaults. Pre-tax profit, reviews the historical data, looks for trends, considers most recent quarterly data, and then there's research. Any changes in the business model to account for changes in the profit margins? What is the company predicting? What are analysts predicting? Value Line and Morningstar. Okay, so pre-tax profit. I've opened up the screen for pre-tax quarterly growth trend, and you see these dots that I circle with red is at the annual report, and the ones in the middle are quarterly. So you can see that the annual report has generally been above that 22.3% line, right? It's been above. Um, so you can change that pre-tax profit. All right. So this is how you change it. You calculate the projected pre-tax profit margin. You take the net profit margin from ValueLine, 30% divided by 1 minus the tax rate. So it's telling us um, the tax bracket tax rate that it's in is 21%. So 30% divided by 1 minus 0.21 gives you a 38% pre-tax profit margin for 2022 to 2024. Remember, this was done in 2019. Um, so it's a little bit higher. The 38% is higher. So we put that in. The pre-tax profit was 22.3 right here. Um, and the pre-tax rate 10.5. So we can dial in 21% over here, right? And then we dial in 38%. And you can see that the adjusted pre-tax profit is 2 times bigger than the default from slide 2, 14.1%. It's now 27.5%. This is data that you're pulling out of the annual report and ValueLine's projections. ValueLine is very trusted. If it's on the internet, it must be true, right? Adjust the defaults for better EPS projections. Number of shares outstanding. Review historical data. Look for trends. Research ValueLine. So ValueLine, you look on ValueLine sheet and it's trending upward. It's calculated at 155. Plug in that 155 and it brings it slightly lower than 27.5%. It brings it to 25.5%. Remember, we were at 14.1% over here. Okay. So, as a summary, check the preferred procedure for a second opinion for future earnings growth. And you can see back here on this slide, it said 14.1, but when you update for ValueLine in the annual report, it not quite doubles. It goes up. In this case, 25.5%. So you can make that adjustment to have just a better data to make your judgment and your decision about earnings per share. Um, it's especially helpful when sales and EPS are growing at different rates. If they're growing at different rates, which means they're not consistent, right? We want up, and we want straight, and we want parallel. If it's not consistent, that EPS is not going to be straight. It'll be choppy a little bit. Um, the preferred procedure centers your study more acutely on profitability instead of on sales expansion. That's not accurately, it's acutely what it does. Let's see if I have anything else to tell you here. Um, Reviews the underlying data and validate if it doesn't pass the sanity test. You can just double check the tax rates by comparing the annual report and the ValueLine. Okay, folks, that was the preferred procedure and how you can tweak it for a second opinion. If you liked what you saw, click subscribe. Tell your friends, tell your family, tell your enemies to come over here, check out this education, and click subscribe. I also have 2 channels, and those channels are Backyard Musings for current events and edgy commentary, and Law School Dash Essentials for law students to I outline actual Cal Bar questions from previous Cal Bars, and it helps the law student pass their law exams and helps them pass the Cal Bar. Thanks, and see you on the next one.